What is up, guys? Welcome back to the channel. Today is August 16th, and yesterday I put up this image on Twitter. And this is showing Bitcoin's upward sloping trend line and how we are danger close to possibly breaking below that trend line. And of course, a lot of people came to me and said, Kev, my trend line looks different than yours. And some people were saying that that trend line doesn't matter because it's all about the linear scale trend line, the trend line that stems back to the very beginning of 2023. If you go to linear scale, you can see that we are actually somewhat far away. And I posted this image on Twitter and got people a little bit nervous. And people started arguing in the comment section about which one is correct, this one, or is the linear scale trend line correct? Well, we're going to discuss this in today's video. If you guys don't follow me on Twitter, definitely do so. Coming up on 130,000. Would appreciate all you guys who follow and smash the like button on this video. Getting into the content here, getting into the discussion, if I was going to ask you guys which trend line is correct, the log scale trend line or the linear scale trend line, which one would you say it is? If your answer was log scale trend line, you are wrong. If your answer is linear scale trend line, you are also wrong. The key word here is market interpretation. And when it comes to market interpretation, it's very important to remember that sometimes you're going to have more than one way to look at a pattern. And the important thing is not to prove which one is right and which one is wrong. The fact is we don't have control over that. You don't have control over which trend line traders are going to be using for their analysis, which means you don't have control over which line they're going to react to. So the reaction in the market is really the key thing for interpreting this trend line. For right now, if you look at the log scale, the one where we are on the trend line now today, you can see that we have come down to it and we are seeing a bounce, a little bit of support coming up off that line. And if the price were to come back to it and break below, you might see a reaction, an impulse down. Now, the interesting thing is even though some traders will react to that trend line, the other traders are going to be looking at linear, which means even though we got the impulse down, there's still a chance that the market interprets this trend line as major support and we bounce. Right? So this is something that I wanted to make sure that people understood. So the solution is we need to be looking at both. We need to be analyzing both in their respective instances. Right now, the log scale trend line is the key trend line to look at. The market's looking at that right now. If we break down, move over to the linear scale trend line and then analyze that. Today, I think it's important that we just make sure that we check that log scale trend line and we see how the market reacts. I felt that that was an important thing to mention, market interpretation, because of the way that people were reacting to this. And also, I want to mention here, we have an interesting comment from the account CryptoCon, who posted some charts that show Bitcoin in the past has seen moves where we come up, break the trend line, create a higher low, and sort of just have multiple trend line interpretations. But eventually we continue up, right? It's a slight breakdown, sort of like a false breakdown with a longer, wider trend being formed. And if we go to Bitcoin, there's a really good example of this. If you go over to Bitcoin and you look at here in 2020, right during the halving, this happened where we had a trend line break. And, I'm sure there were multiple interpretations of it. Doesn't really matter. The point is we broke the trend line and we held support and kind of just maintained sideways action. And even if you drew the trend line, like this, however you want to draw it like that, this trend line also broke, but we maintained support. So that kind of goes off of what CryptoCon is trying to show in this chart. And then he shows this chart where Bitcoin does something similar, where we break down, hold support, and continue up. All of those things are possible. We've seen this type of action before for Bitcoin, so it's definitely not out of the question. Maybe Bitcoin, if it does break down, maybe it's not the end of the world. We kind of just form a base of support and continue up again. But a lot of that is going to have to do with the stock market. If Bitcoin does end up breaking down, I would be looking for something more, along these prices right here, which is a previous resistance, and support. And so I think that I am also leaning more towards the idea that if we do break down, we would end up finding support and just creating like a sideways range before going up again, something like this. Though I don't know if the recovery would be so swift. It might take a little longer than that. We might actually see some sideways action going into the end of the year, or maybe going up into 2024. So if we break down, expect even more sideways action for the rest of the year, going to the mid 20K range, 25K, just below 25K maybe. So that is sort of the breakdown scenario that I'm looking at, something along these lines. And if we do end up holding this and bouncing, then we've talked about this before, I'm looking for the fib target. If you fib the FTX collapse zone, this is a really good one because it's kind of crazy how accurate the FTX collapse fib extensions have been for price targets. Every time we've hit a top, it's been right along one of our fibs, right? Look at this. The 1618 was our target in February. The 2618 was the target here in April, the exact point of the fib. So if we go up again, I'd be looking for something like just above 37,000. Just to give you some rough ideas. Today we had the Fed minutes meeting and they're talking about worries about significant upside risk on inflation. And the Fed was saying that inflation risks could require further tightening. What we also saw was the Fed saying that they don't see a recession. Though I don't really trust the Fed when they say that this is unlikely or this is likely, because they told us that we were not going to have inflation. Remember, they said inflation is transitory. I mean, come on. Obviously, this goes along with the public's expectation on inflation and taming expectations to keep inflation down. Of course, I mean, that's just manipulation of perspective. I mean, are they telling us there's no recession? Can we really believe that? What are they really trying to tell us with that? Don't expect a recession, but there could be one. I mean, you got to really think about what they're saying. I don't take it at face value based on all the times they've been wrong. And at the Fed minutes meeting, participants said a gradual slowdown in economic activity appeared to begin happening. So they're saying that the economy is slowing down, and at the same time, the Fed is telling us we don't see a recession coming. It's like, okay, I mean, that's very conflicting stuff. Other people talking about how two Fed officials favored holding rates steady in July, and some of them think we shouldn't have hiked in July. So we're getting probably closer and closer to a consensus of a rate hike pause eventually is likely to happen in the next few months. Though Jerome Powell is still saying, upside risks, expect more hikes. So he's trying to, keep expectations under control, while we're also seeing, slowly over time, we're getting closer to a pause. And also what we see is the US dollar index hitting a resistance. This is probably a pretty key moment for the US dollar index. The US dollar index began to come down heavily as Bitcoin began to move up. Then we saw some downward sloping consolidation as Bitcoin saw upward sloping consolidation. And so if the DXY breaks out from here, Bitcoin may see a break below the log scale trend line. If the DXY gets resistance, pulls back, well, Bitcoin may just have a shot at breaking up again. There's a lot of forces at play, as we discussed in previous videos. And I would recommend watching this video right here from a week ago talking about the Fed balance sheet. This was a pretty good explainer on why there's so many things to look at and why it's not simple, and whether we hold this trend line or whether we hold the linear scale trend line will have a lot to do with what the Fed says, what the Fed does, and what the stock market does. So we're kind of in a wait and watch period, a lot of things coming together. Just wanted to do a recap on the situation. By the way, if you guys are interested in locking in a $19 a month slot in my Patreon forever, for a lifetime, definitely take that opportunity now. During bull markets, the prices go way higher than this per month. So if you get in now, you'll have that price, you'll have that slot for as long as you want. And we're going to be doing altcoin picks, trade setups. Of course, more of those things are going to be coming as we get closer to the market cycle when the market's more active. Right now, things aren't exactly exciting. But, once the market starts moving, we're going to start doing altcoin picks, trade setups, etc., etc. So definitely take advantage of this now while it's still cheap. Limited slots, limited time. See you guys in the next video.